Welcome to the Learn to Trade home study program. The purpose of the USB is to give you a little insight to the program content prior to attending the course at our training center. LTT Smart Chart Consulting Incorporated provides general information only. This is not personal advice and no individual needs or circumstances have been considered, nor is this an offer to buy, sell financial products or securities. Financial products or securities are complex and entail risk of loss. You should always obtain professional advice to ensure trading or investing in such products, or for determining whether any of them is suitable for your circumstances. You should ensure you obtain, read and understand any applicable offer or disclosure document before trading or acting upon any general advice provided in relation to such products. So, welcome to the home study program, everybody. My name is Adam and I'm part of the global trading team. We're very excited to guide you through your education in trading, and looking forward to seeing you at one of our training centers across the globe. So I wanted to talk to you about trading, and first of all an introduction and really asking yourself the question, why are you here? Many people have different goals and different things they want to achieve, whether it's an additional source of income or certainly just another way of making money in the financial markets. And this is one of the many vehicles that are available to you in times of financial services. So before we get started, we have to consider the importance of a trading plan. Successful business owners, and some of you may be successful business owners, do generally have business plans before they get started. Trading is like your new business and can be very beneficial to you. Successful traders have trading plans, much as those successful business owners have business plans. If you fail to have a plan and work out how you're going to approach the market, you most definitely plan to fail at that market. So throughout this course we'll be helping you with your trading plans, and please speak to the team in the breaks whenever you attend the course, and throughout the few days after that, to ensure you have a plan for success. In light of that thinking, it's important to have financial goals and think about your starting capital. Everybody has to start somewhere in trading, so not necessarily everybody has a lot of capital to inject into their trading account before they get started, but you most definitely, from a risk management perspective, need to think about what you can afford to invest, and whether indeed there's any additional capital to look at moving forward. The best way to look at this in a very basic way would be to consider your goals and what you want to achieve financially, and think about a 1, 2, 3, 4 and 5 year plan to move things forward. The team, when you meet them, in terms of the trader coaches, can help you understand from a risk management and trade sizing perspective the best way to achieve those goals. In terms of your road to success with trading, there are 3 main fundamental areas to be successful. The first is risk management. A lot of people make mistakes when they start trading, and they haven't had any education around the risk management subject. This covers trade sizing properly. Trading really is a mathematical numbers game. Everybody, I tend to find, when they first come into this with no experience, can have some rather large ideas on where they want to go with a small amount of money, but you should always have a risk managed approach to that. The course over the 2 days, and with a third bonus live trading day, will cover the risk management perspective in a lot more detail. You then need to have a strategy. Strategy-based trading is most definitely one of the key cornerstones or key pillars to being successful in trading. A strategy is purely where to get in and where to get out of the market. So it's very important to consider the direction of the market first, and whenever I'm teaching anybody how to trade, and have been doing for quite some years now, we have to consider that the market has a certain direction. The market will be either going up, going down, or going sideways. The strategy is not necessarily the thing that tells you the direction of the market. The strategy just gives you the ability to take advantage of the market direction. So if the market is going in an upward direction, you would look to use the appropriate strategy, the appropriate trending strategy, which also applies if the market's going down. Up or down would be the trend. So you need to use a trending strategy that gives you clear entry and exit criteria so that you can take advantage and bank profit within that time frame being traded. Trader applies discretion. Discretion is your decision-making process, and I find the decision-making process can be an emotional one, especially where if you don't have necessarily too much experience of trading in the market. If you haven't understood the direction first, or learn how to read the chart first, read any particular chart, a price chart is a price chart, you're not necessarily going to be able to make the best decisions. Discretion comes from your experience of taking decisions in the marketplace to ensure that you take advantage of the market direction. So I hope that makes sense. Just to recap, if the market is going up or down, you would use potentially a trending strategy that would give you clear entry and exit criteria. And if the market is going sideways, there are strategies that you could use in the marketplace to take advantage of those moves. So it's all about using the appropriate strategy in the appropriate market condition, and then making sure you trade size properly based on good, solid risk management processes. But we will cover that in more detail when we see you.